Hello, today is February 2nd, 2019. My last call said this was a bullish move and all we had to do to trade higher was to gap and take this high out early. We took the high out early and we traded higher. We have pretty much the same situation here where you have all kinds of new highs and can't hold on to them. This could be churning at the top. All we need to continue higher is to gap and promptly take out this high. And because Monday is a pattern with the early low and the late high and tends to be a positive day and close near the high, that certainly is possible. However, I don't think that's the most likely thing. There's strong resistance here, and we have a few sell signals, and all we need for confirmation that these sell signals are going to hold is to gap down at Monday's open and promptly take out this low. So let's go over all the indicators. First of all, we had an FOMC. Let's go over the MEJT stuff. Here was a buy signal and that worked. It said this drop was false, would retrace. Here's a sell signal. That's already played out. Now let's go over what's not so good about this. We had all these new highs and couldn't hold on to them at the close. Unless we take the highs out early, that's a sell signal. It's also negative that we were actually hitting new highs for this leg and trading in the red until the last 5 minutes. Last 5 minutes doesn't represent serious buying. So it's a negative signal. It's particularly negative. You have a wall into the close. People couldn't hold on to the gains. The last minute, people say, get me long at any price. It tends not to be serious money. The specialists have to take the other side of the trade. And if that analysis is right, we should gap down at Monday's open, at least under this low and preferably under this one. Gapping and taking it out promptly is just as good as gapping under it. And if the analysis is wrong, we should gap up, take out this high promptly, and we should know before the open which it's going to be. Here's the volatility index. The low of the index was 1608. That's under the Bollinger Band at 1610. A reversal from this point signals the end of the leg. We haven't reversed yet, but at least you're in a position where a reversal is believable. I haven't spoken much about Tom DeMark's indicators lately because, frankly, during the rally from the lows, they didn't work well. Usually they indicate overextended conditions, and when you're overextended, typically you correct in terms of price. Sometimes you correct in terms of time, and sometimes they fail in grand style. But that was in a strong bull market. I don't really know if they're going to work in a market which is no longer a bull. But you've got 12 of the 13 bars of the combo sell signal. Rules for bar 13 doesn't have to go to completion, but the rules for bar 13 are kind of loose. If we trade over this close in the overnight session, in my book, that's enough to trigger bar 13 and give a sell signal. These lines here are TDST lines, so you're at a DeMark resistance area. I'd like to have a little more than that. This is our long-term chart going back to 2006. You can see how these trend lines help show some of these lows and even highs. If you go 38.2% along this channel here, you'll see how they mark these lows here and how we hit that right at the high. This is some Gann stuff. He likes to divide things into eighths. We've gone up 5/8 62.5% of the way from the low, from the high to the low. You'll notice we are down 224 points in 224 trading days. That's a squaring of time and price. Now, somewhere along here, we're looking for the end of what I think is probably purple A, but could be blue B. Here's the high. We have your ABC down, and you're looking for this wave to end at some point. You'd like some kind of count that makes that plausible. I think when you have a move like this, you can count it any way you want to, but it's possible to count this as an ABC with C equal to A. There's your A, there's your B, there's your C. It's a pretty clean count. If you go into wave C, there's your A, there's your B, there's your C. It all works out. And you'll see even in A, this ABC all works out. So you have a wave count compatible with a high here. We usually get a whipsaw after the Fed announcement. We've gone up really 56 points from the point of the announcement. You would like to go under this number by at least 56 points. So if this holds, you're looking at a drop to 2,600 or so. Nothing works every time, but that's a pretty reliable thing. And after that drop, of course, you'd overtake this high. So we have possible churning at the top. We have a wall into the close, inability to close over these highs. If the bull is going to continue, if this move is going to continue, you have to gap and take this high out early. And if that's going to happen, we should know before Monday's open. But if this wall means anything, if this resistance holds, there's a good chance we gap down at Monday, probably after trading higher in the overnight session. Gap down Monday. And if we take out this low early Monday, I think we have enough to say this leg's over. We're going to probably drop, not in the day necessarily, to around a 2,600 level. And that's not confirmed until we trade meaningfully under 2,660. But if we do gap under this and it's a negative day, the negativity is going to probably last more than a day. So now the onus is on the bulls to invalidate these signals and take this high out early. Because if they don't, and if we gap under this low, which I think is likely, although not guaranteed, there's a good chance this is the end of this particular leg of the rally. And that's today's call.